2024 has been off to a rough start for Tesla and its CEO Elon Musk, with shares of the EV maker down more than 35% this year, giving back a good chunk of the massive gains the name saw back in 2023, right now hitting their lowest levels since January. It's now among the worst performers in the S&P 500, closely followed by another embattled company, Boeing. So how did we get here for Tesla? Well, back in January, they warned of notably slower sales growth that fueled investor concerns about stock demand and competition from China. CEO Elon Musk then said the company would be focusing on production of its new generation vehicle. That day, Tesla stock suffered its sharpest percentage drop in more than a year, with $80 billion wiped out in market value just in that day, a record-breaking drop.
Elon Musk, the CEO of Tesla, has had a difficult start to Q4 as the EV manufacturer's shares have dropped more than 35% this year, nearly wiping out the huge gains the name saw in 2023. As of right now, Tesla is down to its lowest points since January, ranking among the poorest performers in the S&P 500. Boeing, another troubled business, is not far behind. How did we arrive here for Tesla, then? They did, however, issue a warning in January about noticeably slower sales growth, which heightened investor apprehension regarding stock demand and Chinese competition. Elon Musk, the CEO, went on to say that the business would be concentrating on producing its next-generation vehicle. On that day, the market value of Tesla stock dropped by $80 billion, marking the largest percentage decline in over a year. Tesla recently withdrew plans to build a new factory in Mexico, indicating more difficulties to come. We'll talk about the high insurance premiums, the risk of electric vehicle fires, and the impending supply chain problems brought on by China's hegemony in battery production in this video. The crucial query still stands. Is the EV dream fading? Are governments moving too quickly and too forcefully? And is the market prepared for such a significant change? First, though, please remember to help us by giving this video a like and signing up for Tesla Stock News *. Now, let's get going. For the EV market, these are challenging times. According to a startling new analysis, there is a serious slump in the electric vehicle market. Automakers are losing billions of dollars because they are having trouble selling electric vehicles. This article reveals 3 serious issues that have caused Tesla's stock to drop by an astonishing $80 billion in only 1 week, and it also explains why EVs might not be the future that everyone was hoping for. So what is contained in this report? Does the political elite keep any secrets? Is it possible that EVs are more of a fraud than a way forward? Prepare to be informed about some concerning shortcomings that have surfaced if you believed that automakers were the only ones pushing for electric vehicles. The story begins in the middle of 2023. Sales of electric vehicles were increasing as more brands released their electric models. But as longtime EV drivers related their terrifying experiences and made clear the actual difficulties of driving these cars, reality started to sink in. Consumer Reports recently released a shocking expose that exposed multiple electric vehicle EV firms, including Tesla, and suggested that EVs might not be as safe as claimed. Keep checking back. We'll go into more detail about that soon. Leading economists, meanwhile, are raising the alarm and speculating that the electric vehicle EV market might be the next major catastrophe. There are a lot of electric cars parked outside of an Arizona movie theater that is boarded up, which raises concerns about the EV market. According to one analyst, as Steve Nelson explains, the EV market has slowed down overall in 2024, and this overflow lot may be an indication of that. According to Clay of EV Access, hundreds of electric cars are rented out to devoted customers in Phoenix. He says that as far as the car industry is concerned, there is nothing more promising than electric cars. More Teslas are available for rent than anything else, and demand for them is high. Due to their early success in carving out a market niche, Tesla is able to take a more comprehensive approach to the product. However, even though Clay's rental company is doing well, Hertz is getting rid of its Tesla fleet. Nearly 250 Teslas, including some Cybertrucks, are currently parked outside of a boarded-up movie theater in Scottsdale. The majority of the cars are brand new and still covered in plastic. These overflow lots are indicators of sluggish demand. According to industry expert Carl Brower of icycars.com, you see a lot full of brand new Teslas, and it's getting more and more full all the time. It's obvious that they can't sell these autos to anyone. Regarding the large number of EVs, Tesla did not reply to inquiries. In 2024, the business has slowed down overall, even with all the hoopla and the government's alluring $7,500 tax credit. A growing number of consumers are rejecting EVs after being able to look past the facade. Biggies like General Motors and Ford are also feeling the heat. Ford wa. Let's examine EV sales in more detail first, though, before we get started. In only 1 year, Ford and GM lost $5 billion on their electric vehicle EV operations combined, which translates to a $36,000 loss on each EV sold. Tesla, a once profitable company, had to lower prices 7 times in 1 year in order to remain competitive. In the end, consumers are interested in electric vehicles, EVs, but they are not prepared to pay outrageous costs. Furthermore, the Biden administration's current 80% EV supply reliance on China is increasing production prices and putting us in danger of becoming overly dependent on a foreign nation. Sales of electric vehicles were skyrocketing at the beginning of 2023, then they abruptly fell off. The increased cost of owning these electric vehicles is a result of rising interest rates. Customers are starting to take a second look at gas-powered vehicles and hybrids. Even the CEO of Toyota is disparaging EVs and placing a large wager on hybrid vehicles and hydrogen fuel. Furthermore, it's not limited to the US. Germany is seeing a decline in EV sales, even with the EU planning to outlaw gas-powered vehicles after 2035. Consequently, businesses such as Ford, Toyota, GM, and even Tesla are reconsidering their electric vehicle, EV plans. There has been a change in the electric car market as Tesla recently canceled plans to construct a new EV facility in Mexico. Additionally, General Motors has stopped producing the Chevy Bolt, their most cheap EV, and postponed the release of their electric pickup trucks. Ford, however, has stopped producing the F-150 Lightning as a result of weak sales data. The market leader for a long time, the F-150, isn't doing as well as anticipated. It's turning out to be harder than expected to convince devoted consumers to convert to electric power. It's like attempting to convert a steak lover to veganism overnight. However, the problems go beyond sales. A number of issues, ranging from software bugs to range anxiety, could prevent EVs from being widely adopted. The absence of charging outlets is a big issue. It's like having a phone but nowhere to charge it. The public's enthusiasm in EVs is declining as government incentives and regulations that once looked to be driving their growth are being phased out. Sales have suffered noticeably in nations like Germany and France, where incentives from the government for EVs have been lowered. Excitement is further tempered by the fact that fewer cars in the US are now qualified for the coveted tax cut. Let's examine the risks highlighted in the most recent EV report, which has precipitated a $1 billion decline in the price of Tesla's stock in a few short days. If you were thrilled about these quiet, elegant EVs, you might be disappointed to learn that they might be more problematic than conventional gas-powered vehicles. A startling 80% of EV owners stated in the research that they would never think about purchasing another one. Based on a survey of 330,000 cars, this conclusion was drawn. The investigation found a wide range of faults, including leaky systems, entertainment glitches that never seem to work as intended, electric motor malfunctions, and engine problems. The analysis identifies 2 main offenders: the established automakers who are still learning the nuances of electric vehicle technology, and the upstarts like Rivian who are only now starting to learn the ropes of the auto industry. Assembling these electronic puzzles without losing any parts makes it seem as though everyone is wandering around in the dark. Electric drive motors, charging problems, and batteries themselves rank highest on the list of concerns. But locating a socket isn't the only problem with charging. The cars often have tantrums when it needs to be recharged. In cold weather, certain electric vehicles, EVs, refuse to charge, resulting in a 40% reduction in battery power. Compared to other car types, electric vehicles, EVs, are losing their resale value at a faster rate due to these issues. For instance, according to Tesla's own software, the value of a Model X could decrease by $21,000 in just a single year. The situation is about to get much more intriguing. It appears that EVs may not be the environmentally friendly superheroes everyone assumed they were. These cars need rare earth materials, which are obtained through destructive environmental practices, and they need enormous amounts of electricity, which is frequently generated from less than clean energy sources. The challenge of recycling these cutting-edge batteries also exists. It is not an option to throw them into the ocean, and the procedure is far from simple. The long-standing,